Brian Cheung has the very latest headlines for us. Brian.
Good afternoon, Akiko. So the Federal Reserve out with a decision on its latest monetary policy update, noting that they did keep rates at near zero. Keep in mind, they've been targeting interest rates between 0 and 25 basis points since the end of March amid this COVID-19 crisis. The statement largely staying the same, although the Fed did note that economic activity and employment have, quote, picked up somewhat in recent months, end quote, obviously referring to the pretty impressive job gains that we saw from the Bureau of Labor Statistics in the month of May, in addition to the month of June. Outside of that, the interest rate policy, again, staying near zero, quantitative easing, still committing to purchasing an increasing rate, although no specificity on exactly at what pace per month they'll be purchasing mortgage-backed securities and also the U.S. Treasuries. Another thing that's worth mentioning is that the Federal Reserve did add a statement to its, add a sentence rather to its statement saying, quote, "The path of the economy will depend significantly on the course of the virus," end quote. Not necessarily anything new there. We've heard Fed Chairman Jerome Powell say that in congressional testimony, in public speeches before, but they are codifying that by adding that to the statement in July, which was not there in the June statement. And then one other thing that the Federal Reserve did do in a separate announcement, they did say that they'll be extending their U.S. dollar liquidity swap lines with foreign and international monetary authorities, what they call the FEMA facility. It's a very in the weeds kind of facility, but they launched that a few months ago to make sure that U.S. dollar funding wasn't strained with other central banks worldwide. That particular facility, when they originally announced it, was supposed to expire in October, but they've since extended that to the end of March 2021, pretty much in line with the announcement that we heard yesterday that the Federal Reserve was extending 8 of its 9 liquidity facilities from the end of September to the end of December. You can read into that what you'd like, but the idea being that the Federal Reserve likely sees the need for more support beyond maybe what it had originally hoped for when it designed those programs. But again, the big headline from the Federal Reserve statement today, the Federal Reserve keeping rates at near zero and committing to use its tools as necessary, as we've heard before.